trade down into the 25th of April's opening range gap. We pause here, drop down into it, use it as resistance here, and then finally gives another drop lower. And then we have the market reaching down in short-term low. And then here's news. And this is my Venom model. Now, if you're new, you don't know what my Venom model is, I only taught it introductorily. I just coined that term if it's not real. I'm not sure if it is, but if it isn't, I got dibs on it. The way it works is first you have to know what you're looking for. In this case, higher prices. Why? Because it's been dropped all day long. And here is your sell side liquidity. I have a video tutorial on this, so you can go back and watch it. But there's sell side here, and they drop it down through the low, but they do it with a SIBI, sell sign of balance, buy sign of efficiency. Then they do a few candles down here, and then they send it ripping right back up. And that single candle going back above that low is a BISI. So we have a strong one-sided candle going down to take the liquidity, a couple candles left underneath that low to absorb all the sell stops for accumulation purposes, and then they displace it higher. This is the two fangs that make up that model I call Venom. And they're injecting the Venom into these sell stops. So fang 1, fang 2, then leaves. All right, so I'm looking for a entry before this candle's high is taken out. I want to be buying. Now there's two ways you can do it. You can do it as a buy on a stop. So a buy stop, this candlestick's high. You can buy it that way. Or if you're trying to keep a tighter stop loss, you can be buying at this candlestick's open or less. Okay, so it's a power 3 type of entry model. So opening price comes in at 19,174 even. So you can put a limit order in. As soon as this candlestick closes and you open a new one, the limit order goes in at this candlestick's opening price at 19,174.00. You put the limit order in, and in this candlestick here, you'll see that I got filled there, and you can see that there. See, look real close right in here. I'll try to zoom the video in. There is that little caret symbol that tells you where the actual fill is, and there's the numerical value. Now the stop loss on that trade is this BISI. And if you look at where I have the fib, see the lower anchored point and the higher anchor point. Those two reference points, and that's what this level is here. Consequent encroachment of that. Stop loss has to be just below that. Why? Because this Venom model is a balanced price range, and it should not come back down here. If it does, it's not a Venom, and it's probably going to be a wrong trade. Okay, I'm not going to be profitable if it goes down to consequent encroachment or less than. So I can put a stop loss just below that and feel confident that it's okay. This is occurring also around the opening range gap low of the 25th. Note that. So there's several things there. We have a market maker buy model. Okay, and I'm buying at the low risk buy. And you could have done accumulation, reaccumulation, and then send it up there like that. That would have been wonderful for a market maker buy model. And then it continues actually going higher, and you can see it rips through that old volume imbalance in the daily chart